Hello friends, today's topic is annuity or pension. In this topic we'll understand what is the meaning of annuity, what is the meaning of pension, what are the conditions for availing exemption under section 10, 10A on the commuted portion of the pension, what is the amount of exemption, and we'll also understand the provisions of the act along with an illustration. Now friends, annuity or pension, we have understood previously under section 17(1) definition of salary, wherein salary includes annuity or pension, which is coming from subsection 1 and clause 2, right? So annuity or pension will always be a part of salary and it will be taxable in the hands of the employee under section 17(1). And friends, there is a certain portion which will be allowed as an exemption under section 10 clause 10A, wherein the commuted portion of the pension will be exempted. Before we move on to the commuted portion, let us understand the meaning of annuity and pension. Both the terms, if you see, are not defined under the Income Tax Act. Accordingly, for this purpose, we will have to refer to the general definition of both the terms. The term annuity is nothing but an annual installment received by the employee, correct? And the said term is more prevalent outside India. The term which is more prevalent in India is pension. The word pension is nothing but payment which is made to the employee for the purpose of past services rendered by the employee to the employer, right friends? So friends, pension is nothing but a periodic payment or a lump sum payment which is made only for the consideration of the past services rendered by the employee. And annuity is nothing but annuity is a yearly grant, is an annual grant which is again paid by the employer to the employee, right friends? And in the case of both the payments, payment made by the current employer will be taxable as salary under section 17(1). Payment made by the past employer will be taxable as profits in lieu of salary under subsection 3 of section 17. And friends, if the payment is not made by the employer, then the same will be taxable as income from other sources. And friends, in the case of pension, there are two bifurcation: uncommuted pension and commuted pension. Uncommuted pension is nothing but a periodic yearly payment made to the employee, and commuted pension is nothing but a lump sum withdrawal of the pension amount. Uncommuted pension will always be taxable in the hands of the employee, whether it's a government employee or non-government employee, it doesn't matter. It will always be taxable. There is no provision of exemption under section 10 on receipt of uncommuted pension. And for commuted pension, the exemption is available under clause 10A. If it's a government employee, then it is entirely exempt, and if it is non-government employee, then in those cases, 1/3 of the value of the pension will be exempt if gratuity is received. If gratuity is not received, then 1/2 of the value of the pension, of the entire pension, will be exempt. Right friends? We will cover the exemption part of clause 10A in detail in subsequent slides. Right? So friends, we have understood the meaning of annuity or pension. And in pension, there are two bifurcation: uncommuted pension and commuted pension on your screen. The word annuity. Annuity is included in the definition of section 17, right? Annuity as well as pension, both the terms are included under subsection 1, clause 2. It is a yearly grant received. If received from the present employer, then taxable as salary. If received from the past employer, then it is profits in lieu of salary, taxable under section 17, subsection 3. If received from any other person, then income from other sources. Example could be annuity received from LIC. There are various annuity plans in which the amount can be received from a person other than the employer. Then in such cases, the amount will be taxable as income from other sources, right? And pension is nothing but periodic payment made in consideration of past service payable after retirement, right? So you can understand the difference between annuity and pension, right? Pension, if you see, is taxable as salary under subsection 1 of section 17, right? And if it's from present employer, then salary. If it's past employer, then profits in lieu of salary. And generally, in terms of annuity, you will find there may be taxability even in case of income from other sources if the same is received from other person, right? And pension is generally paid only after retirement, and it is generally paid by the employer. Pension are of two types, uncommuted and commuted pension. And we have understood, friends, that uncommuted pension is a periodic payment to the employee, and commuted pension is a lump sum payment, right, friends? So let's understand the exemption part in the case of commuted pension. So the relevant clause is clause 10A, right? Subclause 1 is related to the pension received by a government employee. It is totally exempt, right? Subclause 2 of clause 10A is related to commuted pension received when gratuity is also received. Then in such a case, one third of the value of the pension amount will be exempt. And in case gratuity is not received, then subclause 3 of clause 10A is applicable, in which case, friends, half of the value of the pension amount will be exempt. So friends, what will happen is, let's say the total pension amount is 100. Out of this, the employee decides that 80% of the value should be a lump sum withdrawal and 20 rupees should be the uncommuted portion. Then in such a case, what will happen is 80%, friends, 20% is uncommuted portion that will be taxable in the hands of the employee, right? And friends, 80% on that we have to calculate the exemption amount. So first you will have to see whether it's a government employee or non-government employee. If it's a government employee, then it will be entirely exempt as per clause 10A of subclause 1, right? If it's a non-government employee, then you have to further see whether gratuity is received or not. If, let's say, gratuity is not received, then in such a case, half of the value of the pension will be exempt. It means that half of the value of 100, which is the total pension amount, will be exempt in the hands of the employee, right? So half of the total pension amount will be into 100, which will be 50. So friends, the commuted portion is 80 and the exempted portion in this case will be 50, which is subclause 3, clause 10A of section 10. So the taxable portion will only be 30 rupees. If it is received from the present employer, then it will be taxable as salary under subsection 1 of section 17. Right, friends? Further, pension received by judges of High Court, judges of Supreme Court will be entirely exempt. Also, commuted pension received out of annuity plan of LIC will be exempt. So friends, on your screen, subclause 1 of clause 10A, commuted pension received by an employee, which is central government, state government, local authority employees, and statutory corporation, then it is fully exempt, right? Subclause 2, commuted pension received by other employees who also received gratuity, one third of the full value of the commuted pension. It is nothing but one third of the total value of the pension amount. It will be exempt, right? Subclause 3 of clause 10A, commuted pension received by other employees who do not receive any gratuity, half of the value of the commuted pension, half of the full value of the commuted pension will be exempt. And what will be exempt is pension received by judges of Supreme Court and High Court and commuted pension received by an individual out of annuity plan of LIC. This will also be exempt. Now friends, the Bare Act, subclause 1, any payment in commutation of pension received, subclause 1 is nothing but pension received by government employees, right? Any payment in commutation of pension received under the civil pensions commutation rules of the central government or under any similar scheme applicable to the members of civil services of the union or holders of post connected with defense or civil post under the union, right? Or to the members of all India services or to the members of defense services or to the members of civil services of a state or holders of civil post under a state or to the employees of local authority or corporation established by central, state or provincial act. To them, it will be entirely exempt. Now the relevant part. Other than government employees, subclause 2, only a certain portion will be allowed as exemption, right? Based on whether gratuity is received or not. Any payment in commutation of pension received under any scheme of any other employer to the extent it does not exceed receives any gratuity, commuted value will be one third of the pension which he is normally entitled to receive, and in any other case, the commuted value is one half of such pension. Such commuted value being determined having regard to the age, state of the health of the recipient, rate of interest, and officially recognized tables of mortality. And friends, subclause 3, any payment in commutation of pension received from a fund under clause 23 AAB, it is nothing but annuity plan of an LIC. Commutation pension received by an individual as per the annuity plan of LIC, right? So friends, here if you see, ideally this should not be clause 3. This should be clause 2B, right? This should be part of subclause 2 and not subclause 3, which is coming from the Bare Act, right? And friends, rule 90 is nothing but is reiterating the provisions of subclause 2, wherein one third will be exempt in case gratuity is received and one half will be exempt in case gratuity is not received, right? So friends, next is illustration. Illustration, Mr. X on his screen. Mr. X retired on 1st of October 2019 receiving 5,000 per month as pension. On 1st of Feb 2020, he commuted 60% of his pension and received 3 lakhs as commuted pension. So friends, Mr. X retired on 1st of October. On 1st of Feb 2020, he wanted a lump sum payment of the pension, a certain portion of the pension amount, which is 60% of the pension, right? Now what will happen is, we will have to derive the total pension amount in order to claim exemption under clause 10A, right? You are required to compute his taxable pension, assuming he is a government employee. Friends, if he is a government employee, then there are two parts to it. Uncommuted pension. Uncommuted pension will always be taxable whether it's a government employee or a non-government employee, right? So in such a case, if Mr. X it's a government employee, then only uncommuted pension will be taxable in the hands of Mr. X, right? So friends, if a government employee, then if he's a private sector, let's read out the entire illustration first, right? He is a private sector employee receiving gratuity of 5 lakhs at the time of retirement, and he is a private sector employee and is not in receipt of gratuity at the time of retirement. So friends, subclause 2, clause 10A will be applicable, right? So let's compute the government employee pension first. So computation of taxable pension. This is what is expected. Computation of taxable pension in the hands of Mr. X for the assessment year 2021, right? Government employee friends, there will be nothing but uncommuted pension. Friends, for the uncommuted pension, if you see, there are two parts to it. First, Mr. X retired on 1st of October, right? So October, November, December, Jan. For these 4 months, 5,000 per month was the uncommuted pension, right? So October to Jan 2020, it is nothing but 5,000 per month, which is nothing but into 4, right? 20,000. And friends, Feb and March, it will be 5,000 into 60% of the value was commuted. So friends, only 40% will be the uncommuted pension for 2 months, right? So friends, 5,000 into 40% is 2,000 into 2 is nothing but 4,000. So friends, total uncommuted pension is nothing but 24,000. This will be taxable in the hands of the government employee. So you can say taxable uncommuted pension in the hands of government employee, right? Commuted pension is exempt in the hands of government employee, and this is coming from as per section 10, 10A, subclause 1, right friends? So friends, if Mr. X is a government employee, then in such a case, friends, uncommuted pension will be taxable and commuted pension will be exempt as per subclause 1, right? Subclause 1 of clause 10A of section 10. So now friends, second is private sector employee receiving gratuity. In such a case, the amount of exemption is one third of the total value of pension, right? So similarly, friends, uncommuted pension is nothing but it will be same as above, which will be 20,000 from October to Jan, and in Feb and March it will be 4,000. So uncommuted pension will remain same as 24,000, and for friends, commuted pension will have to calculate the same. We'll have to calculate the exemption amount under clause 10A of subclause 2. So what is the amount received? It is nothing but 3 lakhs less exemption under section 10, 10A, clause 2, subclause 2, right? Gratuity is received, so one third of the value. One third of the value is nothing but, friends, we'll have to determine the total pension value, which will be nothing but, first of all, one third of the total value of pension, which is nothing but one third of 3 lakhs divided by 60%, and you can always say into 100%, right? Or let's say this is into 100%. So what we are trying to derive over here is 3 lakh is the 60% value. Then what is the 100% value? This is what we have to determine. And friends, it is nothing but one third of the value of, it will be 5 lakhs, right? 3 lakhs divided by zero point 0.6 is nothing but 5 lakh, and one third of it divided by 3 is nothing but 166,667, 166,667, right? So this is the exempt portion as per subclause 2 of clause 10A, right? So 133,333 is the taxable commuted pension, right? Where the private sector employee receives gratuity. 133,333 is the taxable commuted pension, right friends? Or you can just say taxable pension, and here the government employee, it is only 24,000. So taxable pension, friends, will be inclusive of the uncommuted pension as well, right? So taxable pension, if it is inclusive of uncommuted pension, then 1,33,000 plus 24,000 is nothing but 157,333. So this will be the final answer in case of a private sector employee receiving gratuity, right? So taxable pension in his case will be 1,57,000. 1,57,333. Right, friends? And what if the private sector employee does not receive any gratuity? So this will be the third part, is not receiving gratuity. Uncommuted pension remains the same. Commuted pension will be 3 lakhs, and here friends, it will be half of the value, half of the total value of pension, right? Here also half of 3 lakh divided by 60% into 100, so it will remain the same. Half of 5 lakhs, it is nothing but 2,50,000. 50% of 5 lakhs is nothing but 2,50,000, right? So taxable committed pension is 50,000, and taxable pension in this case will be 50,000 plus 24,000, which is nothing but 74,000. Right, friends? So, friends, here we have understood how to compute the exempt portion in case of commuted pension, right? And the formula you have to basically understand, you have to basically calculate the total value of the pension, and on the total value of the pension, you will have to apply the percentage. If gratuity is received, then it is one third value which is exempt, one third of the total value of pension. And friends, if gratuity is not received, then 50% of the total value of pension will be exempt in the hands of the employee, in the hands of the private sector employee. And in the case of government employee, commuted pension is always exempt. So friends, this illustration covers the entire provision of pension, right? And here this subtopic was basically concentrating on the exemption amount from the commuted pension value, right? So what we have understood from this subtopic is the meaning of annuity pension, right? What is uncommuted pension? What is commuted pension? What are their taxability under the provisions of the Act? And we have stressed on the exemption part of the commuted pension, which is mentioned in clause 10A of subsection 10, right? Also, we have touched upon rule 90, which is nothing but which is reiterating the provisions of clause 10A, right, friends? And after that, we have understood an illustration which elaborates the provisions of the pension provisions that we have just discussed. With this, friends, we conclude the subtopic of pension. Thank you.